Welcome.
This is another episode of the Defenders of Business Value podcast, a podcast where we talk about what makes a business valuable, learn the tips and tactics to increase your company's value that only veteran deal makers know. And now, here's your host, Ed Meisogland.
Welcome to another episode of Defenders of Business Value. Today is a fan favorite. It'll be a shorter episode than normal, but it always seems to do well. And that's when we start talking about market data. So the year-end market data is now starting to be released. And so this first one I want to share, and I've done it, just about every quarter, is DealStats. So let's start with that. On the DealStats, DealStats is a large database where people like me contribute market data. Meaning, when we sell a company, we take the various metrics that we sold it for, information about the business, and we submit it to the folks at DealStats, and they compile it. And then it becomes available to everybody that subscribes to this particular database. It's a great tool. It's the biggest, to my knowledge, it's the biggest in the country as far as what the information that it provides, as well as the number of data points that it offers. Now, I say that, and it certainly isn't perfect. I mean, there is no regulatory body in our business valuation community that says you have to contribute a deal when it's done, like you do in real estate. So my point is that it's certainly not perfect information, but I can tell you, after being in the industry for 30 some odd years, I can tell you that in looking at it, it does hold true as far as the market multiples. All right, so let's start with that. The EBITDA multiples, so earnings before interest, taxes, depreciation, and amortization. So over the course of 2023, the multiples actually decreased, and they returned. It's entitled that the EBITDA multiples have returned to typical values in 2023. So in this period that was analyzed, the EBITDA multiples across all industries, and again, different industries will be higher or lower depending on, seasonality and just technological obsolescence and things like that. But across all industries, they were the highest in 2018 at 5, and then have been generally trending south or going down. And so the multiples have just continued to kind of just ratchet themselves down. And the biggest reason is cost of capital, in my opinion. Access to 5% money over 11% money is certainly part of that. So at any rate, we start at 5 in a 5 multiple in Q3 of 2018. And as of year end 2023, we're at 3.4. Does that surprise me? No. There's a number of factors that can play into this. The multiple that we talk about, the lower the multiple, the higher the risk. That may have something to do with it. I believe that, especially with online businesses and such, the risk increases. It's not a given that, the post-sale earnings are going to be there. Okay, so that's EBITDA. Now let's talk about, if EBITDA is kind of normalizing, sales multiples are going to also. So in this quarter, net sales multiples were at their highest in 2021 at 58% of revenue. So 58% multiplied by your revenue would be the multiple. And then it had moved lower, and it's roughly, it looks like it's about 49% going into 2024. So the high was at 58%. It's now kind of stabilized out at 49%. I can tell you, roughly 50% of revenue tends to be, it kind of hangs out there. I don't think I would, I'm not surprised at all. But again, it went down a little bit. The low was in 2020, where it was at 43%. But I think generally speaking, that can be, you're talking during COVID and such. I'm not concerned about that at all. So then when we move into EBITDA margins, this one is the one that troubles me. So EBITDA margins have declined. All right. And EBITDA margin, meaning EBITDA divided by revenue. So that calculates the EBITDA margin. And so early for the quarter, it was running at, roughly 16% of revenue. All right. And so now, I'm sorry, in early 2023, it was running at roughly a little over 18%. Now it is running at 16%. So it dropped over the quarter, but more importantly, that the selling price to EBITDA, so the EBITDA multiple has decreased. So the earnings multiple, it didn't drop by the same amount, but it did drop. And so that's a little concerning for me. Only because, they should flow together. So that means to me, there's something more out there. Especially when, risk, meaning the multiple, differ, that the companies, that there's something up with the company. And what does that mean? It can mean a whole host of things about the business. And so as a general statement, when the EBITDA multiple decreases, or the multiple decreases more than the margin decrease, it makes you pause to try to figure out why. And I think it's too early in the season, meaning that we don't have enough data on 2024. As soon as we see some other organizations that release their data, we can dig in. But generally speaking, the EBITDA margin has decreased by roughly 15%. Okay, so interesting. The companies that have, or the industries that have had the greatest bumps. Most industries have decreased as far as their multiples go, with exception of a few. And the few are IT, so information, anything computer and online related. Finance and insurance is up. Other than that, every industry multiple, I take that back. Real estate investing is up. And those are the only 3 out of roughly 15 industries that we're surveying that were up. Everybody else is down, not like tons, but enough that they're down. And so as you look at the multiple across all industries, I mean, it's running at 4.1. Now, to me, that's I don't want to say an inflated number. I mean, you're talking, when I say that, you take the median multiple across all these industries. You've got online businesses that the median multiple is running at 16.8, which is, four times as much as most of these industries. So my point is that a median multiple of 4.1, which is at, I don't want to say it remains the highest, that across all industries, but at the same time, it's, to me, it's statistically speaking, I think it's kind of just bolstered by the information and finance and insurance industries. Okay, so the EBITDA multiples for again, private companies, we talked about, they decreased from 3.4 to 3.1. So the 10-year trend, all right. So we've got 15 sectors that we watch, and the sectors saw a significant decrease, in information technology. And again, this is net sales multiples. It dropped from 32% to 24%. The SDE multiples increased by 27%. So the median seller's discretionary earnings, which is EBITDA plus officers' compensation plus discretionary and indirect compensation, those multiples declined in 9 of the 15 sectors. All right. But the SDE, and then the SDE multiple for those 3 that I mentioned increased by 27%. So as we look at the EBITDA multiples, the sectors that saw the most notable declines were educational services and manufacturing, they dropped 26% and 19% respectively. The next thing I wanted to talk about, the asking price to selling price. All right, so interesting that when negotiations begin between buyer and seller begin, normally it's fair. It's over the years, asking prices to selling prices tend to get closer, especially those of us that are that have been in the industry for a while. We recognize that a business that's priced outlandish will not likely sell. So historically, that it's gotten better. Now, I know in some parts of the country, you're probably sitting here saying there is no way sellers are still asking outrageous prices. Okay. Having said that, so the discount, now this is what's interesting. So Biz Buy Sell is another organization that I follow, as far as for market data, what's happening in the industry, and their asking price to selling price tends to have about a 7% delta, meaning that the purchase price to what it actually, or the asking price to what it actually sells for, is about 7% difference. Interestingly enough, that the difference between ask and sale price using DealStats is running between 16 and 18%, which to me is just, I don't want to say alarming, but it's surprise that this one was a surprise for me. For those of you thinking about selling, everybody wants to know how long it takes to sell a company. In 2024, the average time was 241 days. And then let's see, the last thing that I wanted to share was everybody wants to know what 24 looks like. I think it looks a lot like 23. I think that the SBA has done a really remarkable job as far as opening up some capital avenues for us. I think that there will be a lot of opportunity for people to get fair values. I think that the industry consolidations going on I think the prices that were being paid will probably return to, making sense. A lot of the strategics would outbuy the financial buyers, and like they normally do, but the margin was considerably larger. For now, I think that there's more risk in the marketplace, and I think that a lot of, and let's just talk HVAC. People paid just outlandish multiples for HVAC companies, and just to buy the customers. Well, now there's a number of companies out there that have totally overspent, and when cost of capital increases, like, again, let's just use SBA as an example, it jumps from 5-6% to 11.5%. That just totally beats up your cash flow. And so where I'm going with it is I still think if you're selling, I think it's a great time to be in the market to sell. If you're a buyer, I think there's a lot of sellers that are coming on board. I know from our practice, we're as busy as we've ever been. We had a record year last year, and we're probably going to have another record year this year. So my point, multiples are great, and I don't mean to discount them. I do believe that the multiples give us an area of what the business is going to sell for. However, I do believe that only a process can really determine, what the market thinks of it. And so, unfortunately, there's no real way to get there unless you actually put the business on the market and take it through a process. One of the things that I've been doing a lot of this past year, and I'm seeing more of it, is pre-sale consultation. Just hypothetically, what does a sale look like, and how are the buyers going to react toward my particular business? So if that's something that interests you, I'm happy to kind of sit down and just go through the things that we're seeing buyers ask for. So it's not a surprise to you when you get to the market. All right. I hope you enjoyed this episode, albeit shorter. If you have any questions on DealStats, I'll also have the report itself available on my website. You are more than welcome to take a look at it. All right. Thanks so much. See you next week.
This was another episode of the Defenders of Business Value podcast. For more episodes packed with strategies to increase the value of your business, visit defendersofbusinessvalue.com for show notes, transcripts, and free tools to start you on your journey. Subscribe now so you don't miss any future episodes.